Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from TikToker. We're going to jump right into the advanced trading right now as the market seems to be accomplishing the target that we talked about a few days ago this week of 1810. The 1810 is a critical pivotal point. It represents basically the 360-day average. And the market now penetrating the 1810 level with a high now of 1814.20 has activated the upper end of the target zone, or the extreme above the mean of the 360-day cycle at 2164. So what we want to see here obviously is the trading that's going on here. We seem to be experiencing major buying with volume through the average price, and this pretty much has negated this previous bearish tendency or trend and is activating a bullish price trend momentum. Now, I've been recommending here this target of 1810 for the completion of basically the short-term trend that was established here on the 29th, basically with a low of about 1772. The market came down to the monthly average of 1758, which is really the average for this whole month, penetrated that, tested it, and reverted right back up, which really represents that it found buyers, found support. When you get this kind of reversion, it is the confirmation basically that the trend momentum, the price trend momentum has been tested, and it found the buyers that reverted the market right above that, thus activating once again the bullish price trend momentum. When it was activated here, it automatically activated the target above here on the monthly of 1809 that we're looking at, which coincides with the 360-day average price. So the market is telling us, by penetrating through this, that it could potentially want to go higher to meet the next target, which is 1850. And this is the monthly target. The signal, when activated, particularly from the average price, it activates the trend, the price trend momentum. In this case, it's activating the 360-day bullish price trend momentum, negating this bearishness that occurred and reverted from a low of 1676 on March the 8th, which coincided with the monthly buy two levels of 1666. And the target has been completed. Now, even though we came down here below the 360-day average, and it really, by doing that, activated the buy one annual of 1532 on the annual structure. But the market coming down into the monthly levels of support, 1717, 1666, found the buying that was looking for in order to revert from here as a level of support identified by the VCPMI at the beginning of the month and reverted right back up, never coming down and accumulating supply. This is what the AI tells you, that when you are trading in the blue area of the buy one and buy two, whether it's a daily, weekly, or monthly, the structure is that it is an area where you want to accumulate supply. You want to buy. The AI expects buyers to come in. And of course, the market always will validate or negate. And in this case, it validated the algorithm, and the reversion unfolded. And of course, when the reversion unfolds, automatically the average price is the initial target. If it's below, if it's coming from the extreme below the mean. And if activated, automatically it activates the average price above. So 1809 not only was the key levels here on the monthly buy triggers that you see here, but it incorporated the targets of the monthly sell one level at 1809, and of course the 1810 average. Okay, so particularly for my traders in the live trading room here, I want to focus on the harmonic relationship that we have identified. You know, in my last few videos, I was identifying the 1810 to be a major target for us, and it has been accomplished. So where do we go from here? Okay, and what is the VCPMI telling us? Well, first of all, it has completed the targets of 1810. The 360-day cycle average target has been completed, and the sell one monthly 1809 average has been completed. The one thing that I keep referring to is the harmonic relationship that you want to identify, that you want to see when the prices are integrating themselves into the short-term, intermediate, and long-term trends in the market. We're looking at the daily structure to have exceeded the sell-to level. Therefore, the daily structure is neutral. It has got neutral, completed the targets, and when that happens, basically this resistance level becomes the support for the next target above. And when you look at what is the next target above, then you're looking at the monthly target. And when you look, when you put together, basically, which is what I do here, and I share this information on this chart, is for my own, you might say, visual interpretation in identifying the relationship, the harmonic relationship, which is the most optimal level algorithmically or mathematically, where you can expect a reversion to unfold. If broken, obviously it is gaining momentum, upward momentum. But here's the well, I'm breaking down the AI for you on reverse engineering. On one hand, the monthly is completing the target of 1809 and has entered what it's called an area of distribution of supply, all the way up to 1850, which means that it's entering an overbought condition. The average trading above it is activating a bullish price momentum. So you're getting kind of a mixed signal here. On the monthly, it's telling you we are entering a monthly area of distribution of supply where mathematically we can see supply come into the market. We can begin to see sellers coming into the market. So with this knowledge here, you can use this rally, if it does go right into these targets, to take some profits, to reduce your position, to lock in some profits, to manage your profits. Market's not going to do that for you, or the algorithm is not going to do that for you. So when I say use the VCPMI as a GPS for your driving, for your trading, this levels give you, or the VCPMI give you the levels for you to manage your account. If you've been following us, we've gained quite a bit of equity up here. And depending upon now your profile, whether you're a beginner, an intermediate, or an advanced trader, you can use this for day trading. The structure that you see on the 15-minute bar that we use is for day trading purposes. And we are able to identify the daily structure, the short-term structure, identifying if the signals are activated on a closer view, on a microscopic view. So whether we are executing the daily, weekly, or monthly, we use the 15-minute bar. And you can see here a better, closer relationship of the harmonic alignment. So what I would like to see here is watch the market here, at least for the first hour when you get into this kind of volatility, and see what the market wants to do when it accomplishes these levels. Understanding the intelligence is telling you we are entering into a bullish price trend momentum. We have negated the bearishness, but we are entering into a monthly level of resistance or distribution of supply. So you got to be defensive because in my experience, when you start getting into this red level, particularly when you start trading the longer term signals, the probabilities are pretty high that we're going to see some supply come into the market. From a mathematical point of view, you're looking at a 50-50 standard deviation on the average price and a 50-90 standard deviation on the monthly signal from 1809. So now, what we want to see is if the market closes below 1809, it's going to activate a short trigger and revert or reverse the uptrend price trend momentum that has been activated on the daily average. Let's take a look at silver. silver on the left, you see the daily systems or the daily targets completed, 2703, and has also completed the second sell to level on the weekly at 2721. And it also has entered into the area, the AI identifies it as distribution of supply, where you have a very high probability that we can expect supply or sellers to come into the market. 2746. This area here is where you want to use to manage your profits until the algorithm releases its overbought condition, and ideally it inverses into the blue levels. It reverts into the blue levels, or at least the average price, to test the average price. So I have to warn my traders here in my live trading room, basically, that I use, where it's posted literally 23 hours a day. What I'm doing, basically the targets that I'm using to trade pretty much the house account, which is in excess, I believe, by now of about 400% gains, using the same methodology that I'm teaching you here. My mission here, once again, is to show you how you can become an independent, successful trader by using your own skills with the help of the VCPMI as a GPS, very much the same way that you do when you go driving. You turn on your GPS and you put your direction, your targets, where you want to go, and it gives you different options for you. If you get out, if you make a mistake, it tells you get back in here this way or that way, but it gives you the directions for you to reach your targets. And this is what we're doing here, is using the GPS as a vehicle to accomplish taking out trading structures, profitable trading structures, and converting them into real profits. Irrelevant of where the market is going or what the fundamentals are saying or anything else except what the algorithm mathematically is saying. And it has changed the way that I see trading, and it's changing the way that other traders are using this application based on this skill. The more skilled that you are, the more you will be able to understand the function of what we're doing here, in that this is a simple structure, but it is a very, very effective structure. We're looking at a probability model, a probability mathematical probability model. So understanding the market trading above the extreme, above the mean, into the distribution of supply area in red, it gives me the confidence for me to make some decisions as a trader. By eliminating the emotion, you might say, of what you hear on the internet or anywhere else. One of the instruments that I use actually to hedge, for those that are a little more advanced, is dust. Dust is a bearish ETF, and whenever we see that we have reached, like we are now, an extreme above the mean, we buy dust short term. And I'm recommending right now to buy dust as a hedge against where we are in the market.
Autofilled.
I would recommend my traders here in my live trading room to pick up some dust against your position. We are recommending dust in our live trading room here, and pretty much this is how we use this Discord live trading room. Again, it is open 23 hours a day, and we post here basically all of the signals that are activated that are possible to be executed, and I also use this to update and trade the same information, and pretty much train my subscribers, my traders, had to apply the VCPMI as a GPS for your trading. It is a contrarian indicator, and it gives you a mathematical probability as opposed to an emotional input with a high accuracy. It's not 100%. Don't get me wrong. Nothing is 100%. But when you're talking about probabilities, and you're getting a probability factor that works over time very, very efficiently, very accurately, then you begin to put a level of confidence into trading the market more on a technical basis than a fundamental basis. We are just now, I would say to you, are beginning to see some adjustment based on the fundamentals that we've had. We've been hearing short squeeze in silver, short squeeze in the silver market since February. And what we saw was a high in silver of 2030. I'm sorry, 30 and 35, I believe, was the high. We're just making a new high right now. Obviously, today was 27.46. And this is a high that we are just making coming off the bottom here recently. But to go back to what I was saying to you here on this Reddit raid that occurred here in the early part of February, the high was 30.35 that the market, or I would say this move, was able to make. Now, we seem to be breaking out of this resistance again. And on the weekly, when you break out of the resistance, whether it's daily, it completes the program. If you're breaking out into the weekly, it completes the program. So we can see the market breaking out of this distribution of supply area, which essentially means that buyers up here are a lot stronger than the selling supply that we have experienced in the last couple of days. Now, the question is, how much buying power these buyers have to be able to hold the market up here? Is this just a short-term top that the market is making, or is it a breakout? Is it a breakout into the next price fractal? And so the next price fractal is 2850, which is the monthly target. And once again, I want to point out that the algorithm has identified a high probability area of distribution of supply, which is a 50-90% probability factor that, if activated upon completion of the targets and a reversion below those levels, it would activate a reversion back to the mean. So we want to see what the market does here. We want to see what the buying power up here is like in order to sustain all the supply that is potentially going to be coming into the market or is coming into the market, because the price is reflecting that exchange. You see, the supply and demand is being reflected by the green bars that are saying, we take all the supply that has been offered here, and you can see that reflected in the price. The target, it goes right into the algorithm, the first level completed, but it also has activated the higher price of 28.56. So the algorithm doesn't tell you how to manage it, how to position yourself, in what instrument to use. What it identifies is the price trend momentum, the direction of the market. It gives you a target. It gives you your protective level. And it gives you a view of the relationship of the price to all of the major trends in the market, daily, weekly, and monthly. I'm posting some instruments here that we are tracking just to get them a little more visual for us. and see pretty much what the derivative markets are doing here. You got Nugget up about 388, so we got a very, very strong market up here on the derivative markets. A little bit of a correction here we seem to have on the Grayscale Bitcoin Investment Trust. And we also have a little bit of a further correction here on coin. And it has come into levels that are stabbing into the accumulation of supply into buy signals pretty much from here. So we want to keep an eye on coin. We want to keep an eye on Grayscale GBTC, and we want to continue to also look at dust in terms of a hedge. It's one of the instruments that I use, to reduce my exposure, my risk. So when it comes to the application of the VCPMI, obviously depends upon your profile, depends upon your individual profile that determines pretty much how you manage your inventory, how you position your inventory, and how you pretty much manage the risk in that inventory. What I do primarily in terms of the futures markets is that I use it for day trading. I use it to accumulate liquidity, you might say. There are great opportunities that do develop in the futures markets that give me the liquidity to kind of use that as a short-term objective, you might say, and use the whatever profit or whatever income you make or not on the long-term position. Because even if you go short-term and your long-term core position is bullish, depending upon how you place that trade, you can still benefit if the market does what it does in the gold market, which is that it surprises everybody and it goes into this acceleration phase, into the distribution of supply that most people do not see the area of distribution of supply. You, as a guest here or come in to watch my show here every day, have access to that intelligence. This is what I'm sharing with you. For most traders, they do not see this type of intelligence. Therefore, if you look into the media right now, there's a euphoria of buying, particularly on the basis of the short squeeze, the tightness of supply, the stimulus. None of that has changed. We keep talking about it. We've been talking about it since February, and not until now we see that the market finally has come into the area here where it's completing targets from, if you're looking at silver from a low of 2378, we just completed a 23.6% Fibonacci retracement from the high that we made at 3035 to this recent low. So this is the first target, and we want to allow the market to trade here, consolidate here. If it's going to go to the higher level, we're situated, and obviously if the sooner that the target is completed, possibly the faster the market will come down. So this alerts me to be defensive up here once again and to take a defensive position or defensive attitude while my position continues to build equity I am positioned that regardless, synthetically, I'm long the market. I recommend my traders to use, again, based on your profile, even, some of the options markets to be able to synthesize your position. What I'm showing you here is how to use the VCPMI as a GPS, the variable changing price momentum indicator. It's an automatic trading system that gives you the ability, again, for you to make your trading decisions and emotionally, strictly on a algorithmic basis. What it gives you is, as an individual trader, it gives you the ability for you to manage the intelligence according to your profile, once again, or how to create an inventory for yourself, in a sector that you choose to do so. $18.14.40 has been the high, and we are watching our equity grow comfortably, and these are just times where it gives us the opportunity basically to simply manage the profits here. Bear with me here. I'm trading. I'm doing a little bit of trading here. Yeah, I'm looking at coin here. I am interested in getting involved with this asset and hold on to it, and it looks like we've come down into a major buying level here, major level of support, and this is an area where you may want to consider entering this market at this level here. So we do look at other instruments. We're looking obviously at virtual currencies, and I prefer for my subscribers and clients to make it simpler, basically to use for trading Bitcoin, the GBTC, Grayscale Bitcoin Investment Trust. And now that we are looking at coin, it's another instrument, which essentially, I believe, has validity. And I think it is going to be very, very popular here as as we progress into this virtual economy, this virtual world that we're dealing with right now. So let's go back here to the gold and silver, and we continue to see a little bit of buy-in muscle up here. So let's just see how far that could take us. What you want to do is you want to use these levels as targets for you to lock in profits, not necessarily capture every nickel and dime out of the market, but to be able to lock in ranges that produce for you some phenomenal trading profits, and maintain your position. Again, like I say, I personally watch all the trends and I trade all the trends. I have a long-term core position that I've been building, and as I say, I use the proceeds from short-term trading, and I buy more of those long-term calls. And in times like this, for example, that's when they pay off. And so that's insurance that I call, to take the profits that you make and reinvest them and buy insurance long-term. So the algorithm doesn't, tell you pretty much how you manage, your portfolio. That depends upon you, your risk, your profile, and risk and money management, and all those things, and your ability as a trader to be able to understand some of the strategies that you can apply by having this kind of intelligence without complicating your portfolio, without overtrading it, but simply being mechanical in the execution. This is one of the big things that I can say has made a big difference for me as a trader, is the fact that I can talk to you, I can do this, and execute my trades mechanically. I don't have to try to kind of justify my decision, by listening to the rhetoric on CNBC or somebody else's opinion. This truly gives you the ability for you to make your decisions. And it's up to you, again, as a self-directed individuals, to use this. One of the, I think, great aspects about what I do is truly that I see the growth of each individual trader that I'm working with. And everyone is different. Not every trader is homogeneous. But I think one of the greatest satisfactions that I have is that they take this beyond the obvious, and they make the effort, and they go and learn what they can do with this, how they can apply it. And it's a growth process. It's a motivational process. And I feel very, very, you might say, gratifying in what I'm doing here because of what I hear. And I hear, I took that and I put it into an analysis system, and they were able to see the picture, and oh, now I see it. I see what you're talking about. Congratulations. You're on the right track. And this is what the intelligence will do for you. It's unlimited to what you can do with it. When you come down to it, it's a question of simply applying it into a customized way that you trade, that you want to trade. And it's not going to be 100% right all the time. Let me just warn you that this is not a crystal ball, but it's pretty close to mathematically accomplishing those results. Within a room, within a fraction, you might say, within a margin of error, I would say of at least 10%, which I always say. So this is terrific that it's motivating some of my traders really to learn how to apply this intelligently and how to apply the different strategies intelligently. How do they affect their margin risk and managing money management skills? And I congratulate you sincerely that you're taking the initiative, you're taking the responsibility to be your own man, to be your own trader, to make your own decisions, and this is what this does. So at the same time, this can be used very much by just about any institutional trader, home office, fund, or retail account, accredited investor that is trading these markets, not only in futures, but how do you take the futures gold market signal, for example, and convert it into profits by trading securities, ETFs, or derivatives underneath? The incredible thing here is that we track about 70 algorithms live. And of course, we don't trade every one of them, but we do have the database that covers stocks, futures, ETFs, double X, triple X. We're covering virtual currencies. We're covering coin. We're covering gold mining shares, silver mining shares. And we cover JP Morgan as well. So it is up to you, again, as an individual trader, to take the intelligence and apply it in your own portfolio. What I'm recommending here is to buy coin at the market. Trading last at 261.96. It's 261 last. Gold market, new high, 1816. Silver, 27.46, up almost $1 for the day. got some good volume here on the gold market. 1815.5 last. And we have followed through on the derivatives. $18.15.10 last. Making new highs on silver, 27.52. Silge up 97, 16.53. All the charts look like a breakout is occurring, or even on the derivatives. So it's bringing in the derivatives as well on this move, which is broadly supported. And you can see the chart in gold here is approaching the upper end of this band of resistance of this uptrend flag, you might say, being formed. Looks like an ascending wedge. So this clearly shows you it's entering a distribution of supply level and within the other conventional technical analysis indicators such as trend lines. The momentum obviously is pretty bullish. Let the momentum go to its maximum target and then wait for the market to see how it's going to trade the supply and demand up there, how it's going to exchange the supply and demand. You can see coin has activated a buy signal from the B2 level. A lot of volatility today. Once again, I want to wish and congratulate all those traders that are really making the effort to grow with this intelligence in a more sophisticated way in the application in your own portfolio as a self-directed individual. Thank you for the opportunity again to share this incredible information, and congratulations if you followed. Keep an eye on this market. You take care. Take care of those profits. Okay. I'll see you soon. I'll see you next time. Take care.
The risk of loss in trading commodity interests can be substantial. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, and considering whether to trade or to authorize someone else to trade for you. Past performance is not necessarily indicative of future results.